Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick, and we got a good show for you folks today. Harlan Pyan will be our guest at 8:35. He is the founder of Amazing Power Patterns, and we also have some news. We got this big, rather confusing AMD, Nvidia, Tesla news from yesterday. We're going to talk about that. We mentioned it on yesterday's show, and we're going to talk about it again today. Is this big solar meeting or that's happening tomorrow, and what it means for the solar stocks with regards to tariffs on Chinese imports. And then we have some ratings to discuss. We got some taker questions from the chat as always, and so we got a show. Dennis, what's going on today?
Just looking at all this AMD, wild ride for this stock last night, wild ride for it after the bell, wild ride for it right before the bell. So just to, if you haven't been following what's happened here in the last, few hours here since this news, give us the news, the headline that broke right before it. So about at 3:54, so about 6 minutes before the closing bell, headline broke about AMD and Tesla. What was that headline, Spencer?
Yeah, the headline is that AMD will be working with Tesla on a new, basically on a new chip. They're working with Tesla to help them with their obvious self-driving car efforts, a new AI chip. Here's a note. I'm going to read you this note from RBC. It sort of breaks it down. It's rather confusing because they broke the story, CNBC did, that AMD is working with Tesla on a chip. Then they came out and said, the companies came out and said, this is not true. We're not doing that, as of yet. And so the stock's based. First, talk us through the price action, I guess, Dennis. Or no, first I'll read through this note. Let me read you this note.
Yeah, read us.
RBC breaks it down pretty well. So here's what happened. I'm going to read you word for word what the note says. According to unsubstantiated reports from CNBC, among others, Tesla will be working with AMD to refine its new self-driving car chips. NVIDIA is no longer the sole provider of chips. While we think this makes sense from a strategic perspective, it will unlikely result in a single source dynamic where Tesla only works with AMD. Instead, we view this announcement as similar to dynamics we anticipate to occur in the data center. Underlined here, AMD winning some share while NVIDIA remains as the de facto standard and market share leader. So that's that's RBC's interpretation and summary.
So the confusion though is what happened was, CNBC broke the story, and originally they said that Global Foundry CEO, Global Foundries is the AMD spinoff. So that's, the Global Foundry Sanjay Jha said that they're working with Tesla on the chip. But then they corrected the story. So, and I can actually post the link. They put a correction there saying Global Foundry CEO Sanjay Jha mentioned Tesla as an example of a company working with chip fabricators, but did not specifically say that it was a Global Foundries customer. So, they basically come out here and now saying that, maybe this isn't true. So we don't know if the source is true or if it's not true. And the market in AMD is going all over the place because they don't know if there's a deal with Tesla here or not. So last night it blasts off from 1310 to 1374. Last night after hours, the rally just continued like crazy. AMD trade up to over 1460. NVIDIA got rocked on this. NVIDIA went all the way down to the 177 handle. And since then, obviously overnight here that it broke that maybe this isn't a done deal here, and it sounds like it's not. AMD has given back some of those gains, so it's trading at 14, and NVIDIA has recouped some of those losses, trading at 82, 87. So that's, where we're at here. 1470 was the actual high. Thanks, Fuzzy, on AMD. I saw it go over 1460s. 1470 was the high. So AMD's off, about 70 cents from those highs, but still up a buck from where it was around 350 before this news was announced. So I think, the way I'm thinking it is that, maybe this is, in the works here and it's not a done deal yet. So that's why the companies haven't officially announced it. But, you're not sure, maybe there's nothing here, maybe. But I always think where there's smoke, there's fire. I think that's why AMD didn't give it all back here, because I think they also think where there's smoke, there's fire. And that's why NVIDIA hasn't recouped all of the losses either. So, people were asking, did I trade this? I did not catch the AMD move. It was a rocket ship. I missed the original move. And I obviously, wish I would have been playing it that way. But instead, what I did last night was when I looked at this around 4 o'clock, NVIDIA was still kind of trading flat. I was like, this can't be good for NVIDIA. So I actually did get a nice short off in NVIDIA in the 185 handle. Last night went all the way down to 177. I covered some are in the 181s. And then I wish I would have covered it at all because obviously it bounced back. I held some. And then now I've covered here this morning. So I'm all out of it because there's so much confusion here. I don't know if there's a deal, if there's not a deal. And I'm like, you know what? I make $3.5 or $4 on the NVIDIA short. I'll take it, book it, because I don't know what's happening here. Also, last night, Cramer, who obviously, Jim Cramer on Mad Money, who's the biggest NVIDIA bull, I mean, he named his dog NVIDIA, came out last night. After the news, so this was on Mad Money last night. You didn't know he named his dog NVIDIA?
No, I don't watch.
Yeah, he named his dog NVIDIA.
Oh man,
just because he loves NVIDIA so much. He came out last night after, and this wasn't before the companies denied it. And he came out with some technical. He's got this other person that he cites always. I forget her name on the technicals. But he gave an argument that, NVIDIA may have topped out and could see a 30-point downfall. He said he was holding his position still owns it for his charitable trust, and he would be a buyer on a pullback. But the technician thought that they could have as much of as a 30-point pullback. When Cramer gave that piece, NVIDIA fell another $4. It was like 182 was trading at that time. If that's when it fell down to 177, was because Cramer, who is always the biggest NVIDIA defender, actually knocked the stock. So that's why I fell down to 177 last night. It's back up here 182 because we don't know if there's a deal, if there's not a deal. Obviously, there's a deal with AMD and Tesla. It's not good for NVIDIA because, NVIDIA already is working with Tesla, and that means AMD is coming in there. So we don't know here yet. So watch your headlines, listen to your CNBC if you get, whether this is confirmed or not. But if it's confirmed, AMD is going to pop. If it's, fully denied and they say there's nothing here, you could see that fall. But right now, the market is in pure speculation mode. It's already traded 6 million shares of AMD, and we don't know whether there's a deal or not.
Yeah, and here you can see up on the screen, I've got a 5-day chart up of NVIDIA and AMD, so we can see kind of the price action from yesterday. So, Dennis, you missed the initial pop in AMD, so you just decided to just not even.
I went after NVIDIA hadn't really fallen yet. And then there was somebody on CNBC saying that this is, going to be potentially good for NVIDIA too. I was like, what? Come on. I can't see how, if AMD and Tesla actually do a deal, how it's good for NVIDIA. So that's why I shorted NVIDIA last night. And, I was actually rocking and rolling on it. So, it came in, 3-4 points relatively quickly. I took off half because it was like, quick 4 points, and scalper blood me. And it wasn't like a long-term thing. I'm shorting stock. So, and then, Cramer, dogged. And I was like, you know what, I'm going to hold half because I think, there could be more potential. Come in this morning, and obviously, they're already denying it and the stock's back up. So I'm like, wow, should have covered in the 178 handle when I had a chance last night. So I had to take the rest of it off here around 183 this morning, which is obviously, disappointing here when I was trading 178 last night. But this is going to be off headlines here now. So, watch, if there's a deal or not here with AMD. We'll also watch and see what happens with, what the companies say here.
Yeah. All in all, just a very, very confusing story. I think we're
so confusing.
Yeah. So
and you've got AMD moving around like 7-10% on this. I mean, $13 up to $14.70. You're talking about over a 10% move on this potential deal, and then giving back. It was even trading down to 1350s this morning. It's come back. It's 1396 here right now, but it is bouncing around like a yo-yo. It's waiting for the next headline. Yeah. And people speculating: is there a deal? Is there not a deal? Is it just maybe not official yet? We don't know. So, in any regard here, I think, it's, even if there's not a deal, there's, there is a smoke, there's fire. So that's why I tend to think, I'm more of a buyer on pullbacks here on AMD. NVIDIA, I don't know here. It's tough. It's tough to be a trader here when you have misinformation or you don't have the full story.
If I were a betting man, I would bet that the report from CNBC is true. They just jumped the gun and they're a little early, and that the companies are not ready. And
I think so. I think they jumped the gun.
In a week or so. In a week, we're going to get confirmation that this happened, and then, but by then the move will already been priced in, I think. So, but if I had to guess, I would say that's.
I think if there is a deal with AMD Tesla, I think AMD is over $15. So I think if this gets like boom officially announced, this is huge for AMD.
Okay.
I think it's a game changer, and I think NVIDIA is back in the 170s. So, here it is, 182.68 and 113.95. There's definitely an opportunity here yet. But, if for whatever reason it comes out and it's not a deal and it was just smoke and there's no fire, well, then, you're going to see AMD and NVIDIA go the opposite way again. So this is all going to be trading on headlines here over the next day or two as we digest and figure out whether there's a deal here with Tesla or not.
All right, let's move on, Dennis,
solar.
to
solar.
solar. Okay, so we mentioned this briefly at the end of yesterday's show. Tomorrow, I'll just pull up. Is there a solar ETF? I don't even know.
TAN.
AMP.
TAN. TAN.
I knew that. Okay.
It's got a cool ticker symbol.
Right, it does. So, all right, I'll just bring that up for now. So, tomorrow there is the U.S. International Trade Commission will be deciding whether or not the imported Chinese solar modules negatively impacted U.S.-based solar manufacturers, and whether or not to impose a tariff on said Chinese solar modules. The tariff itself will be at the discretion of the president, but tomorrow is a decision of whether or not the tariff will be levied or if it won't be. So we reached out to Gordon Johnson yesterday to see if he has some comments on this and asked him about if he wants to come on the show. He will be on the show tomorrow. I don't know exactly the time of the decision tomorrow. I don't know if there is.
I don't know if anybody knows.
I know. That's my point. I don't know if there is a time tomorrow on the decision. I'm going to assume that it's after our show. But Gordon,
and it could come to, I was reading, it's by tomorrow. So this could come any time. So it doesn't necessarily have to be tomorrow. I just read that it was by September 22nd, there will be a decision. So that means, it could come tomorrow, it could come even today.
Okay.
From the way I was reading it.
Fine.
It's coming in the next 2 days.
So it's coming. This is a big catalyst for solar here. So I reached out to Gordon and I asked him straight up, what do you expect to happen? And here's what he told me. He said, we think they...
The email?
Yes. I'll read the email. He says, we think they meaning the U.S. International Trade Commission, will find injury and feel it will be seen as quite bad for Chinese module makers. The strength in Chinese module stocks, in our view, is then he goes to all caps here, great opportunity to short. Then he says they were at an event last week in Vegas, and their check suggests that the decision on Friday, so he says on Friday, will disappoint to the downside. We have been pounding the table on shorting Chinese solar stocks, all caps again. No one is listening. Oh well. ... Okay. Then I asked him about U.S. names. In his view, FSLR goes higher on this news. SunPower, RUN, VSLR, and SEDG go a lot lower. The Chinese stocks, he's saying, are going to get crushed. So he'll be on tomorrow to elaborate on all of this.
And he has come out now this morning here and not downgraded. He's come out. He didn't have coverage. He come out with the initiating on Jinko Solar JKS with a sell and a $10 price target. He's got guts. I'll tell you one thing about Gordon. That's why I love him, because he calls a spade a spade. And he thinks stock's going down. He doesn't play games. He put a $10 price target on $26 stock this morning. And saying, that this is, and obviously with the email you're saying, a great shorting opportunity is what he's saying. And, this decision's not going to be good for Jinko Solar. JKS is down 3% here in the pre-market, probably because of Gordon Johnson's note here, putting the sell rating on the stock with a $10 price target. So I don't know. It's all about this decision. When the tariffs come in, and it's going to help the U.S. companies, obviously. And if they don't, then it's going to help the Chinese companies there. But it sounds like Gordo's leading to, obviously, the tariffs going through.
He's been pounding the table on that. So just looking at a daily chart of JKS here, I mean, look at it. It hit a high at 30.50. What was that, last week? And then since then, it's been,
it's been coming in.
All down to it. Yeah.
Somebody's jumping the gun here a little bit, and somebody's scared to hold this thing. So, and maybe it's, that there's other people, Gordon Johnson's checking, maybe there is some, rumors out here that this is going to go through. So we're going to find out officially. Funny things happen. So if you are taking any of these stocks home tonight or trading them, into Friday, just be aware this decision is a game changer for, all of these solar companies. It's going to be good for the domestic ones if it goes through. It's going to be bad if it doesn't. So, and Jinko Solar is going to go one way or another. There's going to be big moves on these solar companies one way or another. So, and Chinese one's going to be going one way, and obviously First Solar, maybe some of the ones here going the other way. I still own Canadian Solar CSIQ. I've been hesitant. I've been thinking about booking the gain into the report here because I bought at 13. It's up here. I almost got to 18. It's at 16 now. Part of me wants to hold it through because I remember Gordon saying, if this does go through, this could be, potential to get to $30. I don't think he meant that immediately, but he thought the value of it would be, significant. But if for whatever reason the tariffs don't go through, obviously lower. So a lot of thinking to do here. This is major headline risk. Treat this like an earnings event, a major earnings event for all of these solar companies.
And then someone in the chat asking if we could get the names in. So Jinko Solar, JKS is the one that we mentioned already. JSO, JA Solar, JASO is the ticker. That's a big one. And then Trina Solar.
These are, and let's just classify whether they're Chinese or not. So which ones did from Gordon's note? From Gordon's note.
Actually, I don't have the note in front of me. I'm just going off my knowledge.
Okay, from his email that he sent you, what were the ones that he?
Okay, from the email that he of the names he specifically mentioned, the only ones he really mentioned were, he didn't mention any Chinese. He just all Chinese solar names. The ones he mentioned, here we go: SPWR, SunPower, RUN. I'll put these in the chat too. SPWR, RUN, VSLR, and SEDG. Those are the four that he specifically singled out that will go lower. FSLR. He
says they're going to go lower.
FSLR goes higher. Yep, FSLR goes higher. So
interesting that he didn't even mention JKS, but he came out today and with the JKS. It'd be good to get the note. Is what he said in the JKS. Now maybe he didn't send you that because he knew obviously that he was going to come out with that today, so he didn't want to send you something that before he was publishing it. It's possible. So JKS is the one that he put the kibosh on this morning with the $10 price target.
Yeah, it's possible. In any case. So Gordon does say it will be tomorrow, and we'll get him on the show at 9, and we're gonna talk it out because this is the story because he was on the show like I want to say in like February, and he brought this up. So this has been like the story of solar. If I can go back to my previous point though, to the Chinese solar stock. So JSO, right? That is a Chinese solar name. Trina, Chinese solar name, and then JKS. So those are the big three Chinese solar names, and he is bearish across the board there. So know those names as well. Okay. 20 minutes, 17 minutes into the show, Dennis, and we've talked about two things.
Two major things we talked about, though.
Where should we go next?
Okay, so there's other stocks in the news here.
Sure.
You want to talk Chipotle yesterday?
I did.
Big moves.
I did. Yes.
CMG. Ackman he was on CNBC yesterday. You were watching, Spencer. Give us details.
So I was like half watching. It was like on in the office, and I was like half paying attention, and then I hear Brent start freaking out about Chipotle because Bill Ackman said on the CNBC that Pershing Square did a taste test, a blindfold taste test of the queso, and that it was delicious. The Chipotle queso was good. And then Chipotle moved higher. And Brent was like, I cannot believe that this is real life right now. I cannot believe I saw here's a 1 day chart, and I cannot believe that the stock moved higher. So it
moved higher on a taste test.
It moved higher. Bill Ackman said their queso is good. And this is the spike that I'm referring to here, right there, and where the line is on the screen. And that, so we don't know, who tasted this queso or how many people. It doesn't matter who's who, but Bill Ackman says the queso tastes good, and then Chipotle moves higher, and that to Brent was like the craziest thing ever.
Yeah. And I mean, the whole thing, I watched a lot of that interview there too, and the whole thing was kind of ridiculous. I mean, Ackman was on there talking about, he actually said at one point in time, I think there's a whole bunch of short sellers on Twitter because they're all saying that it tastes bad.
He did,
and it doesn't. We did a taste test and it tastes good.
Yeah.
I mean, people are entitled to their opinion. We need to send somebody from the Benzinga team over there to Chipotle and try this
do our own
product
taste
there. And see if it actually does taste good or not. Regardless, I'm sure it tastes okay. It's just, kind of ridiculous that you're on there and you're doing taste tests and stuff trying to defend your position. I mean, we know he's in there from a lot higher. He's probably ticked off, significantly that he's down 100 points on this position that he put on. But we were saying on this show, I think it's justified. I mean, the valuation for Chipotle is still scary as hell. Even at 300, at 400, I felt like it was ridiculous. Like he was trying to say it's so undervalued. I don't agree with Ackman whatsoever on that, because I think, with everything that was going on, with the E. coli and, the other concerns there, growth was slowing. And when growth starts to slow, that's what we've talked about on the show multiple times too. You have this gap between value and growth. Always growth is going up. All the growth investors in there. Growth starts to slow. The growth investors hit the exits. And the value investors don't come in until a lot lower. So that's when you see this adjustment in price. That is what we are currently seeing here in Chipotle right now from 500 to 300. As it gets lower and it starts getting, saying that if it ever went down to the lower 200s, then value investors like myself, because I'm a value guy, start to come in. But I look at it and I see the multiple still high. I see growth slow. And I think, no, not for me. Growth guys say, no, it's not growing as much anymore. Now, if growth starts to pick up again, that's when the stock will start to pick up again. But, nothing goes straight down, nothing goes straight up. So there's going to be movement in that. But if you're trading something, a stock off of, somebody's opinion on a taste test off of, CNBC, I think you're doing it all wrong. So people who are buying this thing because the thing tasted good or didn't taste good, that's all ridiculous. Do your homework on these kind of stocks. I still don't like Chipotle. I'm not short Chipotle. It has come in a long ways. I think the easy money on the short side has been made, but it's still a little bit too valuation. It's still too scary for me. And I'm still not 100% confident that they figured out all their food issues.
Just as a refresher, Ackman's stake was disclosed on September 6th of last year as 9.9% stake. It was when his 13D came out. So September of last year. So I'm looking at a chart here. Yeah, I mean he's underwater.
He's at 380, 400.
Yeah,
There's no way he's not underwater, because it was back then it was trading significantly higher than it is now.
Yeah, he's underwater.
He's had a rough go.
Yeah,
now he's coming on CNBC and doing taste tests and stuff. It sounds a little bit desperate to me, but Ackman, he was saying, and they were trying to hit him on the track record a little bit. The recent track record for him has not been good, but really when you consider it long term, he's still a good track record. He's had a couple bad, deals. The VRX he got murdered on, he owned that. This Chipotle one doesn't look great for him either. So, that being said, and he was talking a lot about ADP yesterday too, saying there's value here and wants to get in there too. And we know ADP had the big Ackman pop back in July. It's come back in, to where it is now. So, his recent track record's not great. He's still got the long-term track record, which he was defending. So, it remains to be seen. I mean, even the best traders are going to have, spells where they're not good, or, they have some, some bad trades. And, when you're longer term like this, it's you can have some bad, VRX really hurt him. And it hurt his, the confidence in him as well. But you might get that back. But I'm not a fan of Chipotle. That's my own personal opinion.
Yeah, Bill Ackman needs a win. So I don't know if this will be.
He needs a win. You're right. To get the confidence back.
He needs a win. So. All right. Let's move on to the financials, Dennis. We had Fed yesterday. It looks like end of QE. It's the end of an era, and impact on the financials. What did you see?
Yeah, well, the Fed. So, do you have the actual Fed statement? What they gave yesterday?
I had it up, and I
under the bus. Go to Pro. Pro have it.
Yeah, I had it up, and I took it down to look.
That's what I'll go grab it from the Pro. So obviously, with the Fed decision, financials took off. They blasted off in orbit right on the initial number there. You can see a stock like Citigroup went from 71.34 up to over $72. Bank of America ran from 24.75 up to 25.20 really quick. So there were big moves in the banks up. And the opposite direction, you had stocks like the utilities got whacked. Southern was down 50 cents. If you look at the XLU, it went from 54 to 53, quickly lost 1%. As they look like they're going to tighten it up, and they're not afraid to continue to raise interest rates. So that's good for financials, bad for bonds. That's why the TLT too, if you bring that up, got rocked. It did come back. So, it did bounce back. And a lot of times you do see these things whipsaw. But, with what the Fed said yesterday, it looks like they're still hawkish.
Yeah, the benchmark interest rate is unchanged. They do project 3 rate hikes in 2018, 2 in 2019, 1 in 2020. They say near-term risks to the economy roughly balanced. Recent storms meaning hurricanes, will affect near-term economic activity, but are unlikely to alter the course of the economy over the medium term.
if you're not going to raise interest rates right now, when the markets are at all-time highs and confidence is high and everything, you're never raising interest rates. So they've got it. If they're going dovish here, like what the hell? So that's why I say it's kind of like you didn't expect this,
right?
It surprised me how much the financials rallied, because I would have thought a lot of that would be baked in. I mean, I can't see how the market's trading at all-time highs that they're all of a sudden going to be dovish and scared. I mean, this is the time to raise interest rates. It was probably before they even started to do it, if they were going to raise. That being said, I'm still sticking to my theme that you can't raise them substantially, because you will cripple this economy. You will put the housing rally that we've had since 2007 in jeopardy if you raise too much. People are all built on debt. They can't support interest rates ever going to 7, 8, 10% anymore. So, can you go to 3, 4, 5? Maybe. But, once you start getting over 5%, it's just people have too much debt. And it's the different world. And that's why I think interest rates are low, in North America for the foreseeable future. That includes Canada as well. I know Canada's raising rates and raised them a couple times there. But again, if you look at prices of houses in Toronto, prices in Vancouver, you can't start raising rates, substantially here, or people are going to start losing their homes, because there's a lot of people that, are in these homes that they probably can't afford, if their interest rates are 5 or 6%. But when their mortgage is 2.7, they can afford them. So that's, why I think interest rates, will be low for the foreseeable future, but they can go up a bit.
Alrighty, and
that's my.
I agree with you across the board. So not really a whole lot to add to the interest rates. At this point.
And on that note, so just before we're kind of talking, we're not talking a lot of specific stocks here today. Maybe we'll get to some specific stocks when we get Harlan Pyan on here in 10 minutes. But there was somebody, or Warren Buffett, and you said you saw this as well. Warren Buffett was saying here, and I saw it from Josh Brown, so that's where I saw it retweeted. But Warren Buffett apparently sees the Dow at 1 million in 100 years. So he's saying in 100 years from now, we're going to see Dow 1 million. And and you gave a good argument, Spencer. That's only like 3% growth a year.
It's 3.9% annual growth, which is
so
not
4% growth a year, which doesn't seem unreasonable.
Not crazy.
That's not unreasonable. And maybe I can get on board with that too. But the one question I have, and I tweeted this out, the one question I have is, where does the growth, if you think that the Dow, in the long run, is really driven by, profits, corporate profits, and, if you really believe, that's the way the market works in the long run, that, as corporations make more profits, the markets go higher. Where does that more corporate profit come from if population isn't growing like it used to? Because if you look at, through the 20th century, 1940s, 50s, 60s, we had the baby boom, really a lot of the growth came from, in the Dow, came from population growth. People, more people consume more, which obviously increases corporate profits. In the last 15 or 20 years, I would say we haven't had the population growth that we did before, but because we're so, we've had so much easy money, is that the average person now consumes more than they used to. You used to have to, back in the 70s, have 25% down to buy a house. Now you don't need anything. So, the average person is in a lot more debt, and they can consume a lot more because they have more money. They've been given more money. But if your average person now is already debt laden, they're not going to be able to handle more debt. And if, population isn't growing the way it used to, where does all this money come from, or all this more corporate profits come from to drive the Dow to 1 million? Where does it come from in the next 100 years? That's my question. And that's my question in the chat too. Where does the growth come from if population isn't growing?
So Dennis actually brought this up on the pre-market show, and I don't know population growth numbers off the top of my head. So I looked it up, and here's what I got. The U.S. population grew by 0.7% in 2015, which is the most recent data, which is the smallest annual expansion in the last 80 years. So let's break it down over decades. The U.S. population grew an average of just over 0.7% for this entire decade. That rate is shrinking. It grew about 1% annually in the 2000s or the aughts. It grew around 1.2% annually in the 90s. Going back all the way back to the 50s, at the height of the baby boom, the population growth was an average of 1.8% each year. So we've gone from a decade-long average of 1.8% to a decade-long average of 0.7% for the current decade.
And declining. Like and not only in the U.S. So like in China, if you have more than one baby, I believe they tax you over there. Like and in Europe, the population, itself, I believe is not growing there either. So it's not just a U.S. phenomenon here. It's a matter of like resources too. Like how many people can the world really support? Can we, some I've heard some estimates that okay, we could have 10 billion people, and then we kind of are maxed out. That's what the Earth can support people. I don't know if that's true or not. These are all just estimates and stuff. But I just wonder, if population continues to not grow like it used to, or even potentially decline, and if everybody's already laden with that, we don't then where does all this money come from to drive corporate profits and drive Dow to 1 million? That's because anybody can just say, oh, we've grown at 4 or 5% in the Dow for the last 100 years, so that's going to continue for the next 100 years. I'm not so sure. I'm not so sure the population growth wasn't the driver here, and I think it would be. And I'm not sure where that growth comes from. So that's an argument against long-term investing. Maybe let's all be traders. So and this is just food for thought. I'm not selling all my stocks here and going to cash because I'm all of a sudden thinking about where's this next 100 million go. I'm just arguing that I don't know if I see Dow 1 million. I don't know. Maybe it's possible. And if we have a complete disconnect from corporate profit and the Dow just goes wherever it wants to go, then that's a different story. But if you really believe that it's driven by profits, I don't know where all these future profits come from.
I have a theory, not my theory. Wave trader in the chat. War. There we go. Problem solved. Done. We're done here. Everyone go home now. Everyone go home. War is good for the economy. We're done.
I mean, there's lots of short-term things that are gonna make the Dow go up, make the Dow go down, or in this case, the Dow just seems to go up every day. But really, in the long run, it's driven by profits. I don't know where they're coming from. So, Warren, I'd like to sit down and talk with you about that because we're seeing if we can get Warren Buffett on the show because I want to know how he's coming up with a 1 million target.
All right, he's on my speed dial. I'll give him a dial, and I'll do that while you give us the imbalances.
Okay, let me just go grab them. Actually, I gotta reset my platform here one more time. So opening up the imbalances for you. We got them a minute 45 ago. Obviously, I sometimes, if we have newer listeners, this is the 8:30 imbalances that are disseminated from the floor. That's telling you whether there's, orders to buy or orders to sell at the open. So these orders that are coming in are geared for the open. So for example, right now, I see Bank of America with 118,000 shares to sell. So if Bank of America was to open at this second, it would mean Bank of America would open down. Now, there's going to be more orders coming in over the course of the next 50 minutes or 58 minutes, and this is for, the open. So things can change rapidly. But as of right now, Bank of America has 118,000 to sell, and it's trading down a couple cents in the pre-market. Alibaba has 47,000 to buy. If you've been following the show for a while, Alibaba has a buy and balance almost every single day. It almost opens up every single day. It's been a trend for a long time. But BABA has been a monster. I still like Alibaba out of all the stocks. It's one of the ones I like. Out of all the growth stocks, it's one of the ones I like the most still. Trying to scroll here. I usually like to give you a Snap. They're all pretty small, so I'm scrambling here a bit. Oh, Snap. Wow. I don't know what's going on this morning. Snap has a 522,000 share sell imbalance. And if you look, it just fell too, actually, just as that imbalance came out. If you look at where it was trading at 8:30, right before that information came out, I'm just going to go look at exactly where it was trading. It was trading up at 14.10. Now it's trading down here at 13.98. So it just lost 1%. Based on that opening and balance information. And this is information that is available. You got there's ways retail traders can get it, but it's the proprietary feed coming from the floor. So 522,000 shares to sell in Snap. That is very significant. We haven't talked about Snap for a while.
No,
that is come in quite a bit from where it just was just even a week ago. It's flirting with the 14 support here right now. That's major support because they had a double bottom 1401 from 1408. It's 1416 here right now. Falls below 14, it starts to open up a bit. That's a major level this stock needs to hold for the bulls to still have a case here in Snap.
We haven't talked about Snap in a while. You're right. The one thing I'll add on that is I was reading. I frequently read articles about just sort of like the business of news, the business of media, and the media companies they hate Facebook, right? They hate Facebook because Facebook is not a good partner. It's hard to make money from Facebook if you're a publisher. They love Snapchat. Snapchat is a great partner. NBC just launched their show on Snapchat. BuzzFeed has a show on Snapchat. And they love Snapchat because they can make money off Snapchat. Snapchat enables publishers of the platform to make money, unlike Facebook, who really just keeps it all to themselves. So the publishers that are actually populating the content on the platform don't like Facebook. They love Snapchat. So we'll see what implications that has going forward. But 8:34 now. Harlan Pyan is our guest today. He's the founder of Amazing Power Patterns. I think he was the first ever guest on the show. You would know better than I, Dennis. You've been here longer than me, but Harlan Pyan is our guest today, so we'll be right back with Mr. Pyan. Welcome back, everyone, to Pre-Market Prep. We're on the line with Harlan Pyan, founder of Amazing Power Patterns. Harlan, how's it going today?
Hey, no complaints. A lot of action going on in the market. A lot of good-looking patterns showing up there. We're on the verge of end of the quarter. So, it's a bias. We've seen it time and time again where they just kind of magically push us right into the end of the quarter. So we'll see. I'm not going to hang my hat on it. I'm more of a guy that trades what I see, not what I think. So it's all about the action speaking louder than the words for me.
So Harlan, you were liking the chart of NVIDIA, or you said you like the action in NVIDIA here. We've had a lot of news overnight on AMD. There was this potential deal, it sounds like, with Tesla. And then they're saying now they don't know if it's a deal is official or if it's even a deal. NVIDIA got hit last night.
Is it CNBC saying?
So CNBC broke the story at 3:53 that AMD and that Tesla's working with AMD on chips for autonomous cars.
Right.
And then the last night they corrected the story and they put a correction there and saying, well, it wasn't. And I could read it again here, Spencer, if you have it in front of you.
I don't know. I guess
it's
I
basically
just kind
not
of read
official.
it.
So they jumped the gun. It's kind of made it sound official, and it doesn't sound like it's official yet. And AMD rallied up to 1460 last night, or 1470. It's now down at 1394. NVIDIA sold off on this last night to 177 handle. It's back up in the 181 handle. So it's really had a yo-yo ride after hours. What are your thoughts here?
Well, I'm not going to go poo-pooing, the report or anything, but, I just find it kind of funny that, here we get a report, stock gets slammed, and then somebody goes, uh-oh, wait a minute, and now let's retract the report to a degree, so it's just kind of comical. I'm not going to read into it. Let's just talk NVIDIA. It's a monster. Come on. I mean, go look at the daily chart. This thing broke out of like a 2-3 month base and it took off like a rocket. So, and rightfully so. I mean, it's an awesome company. They're going into their strong seasonality because they do a lot of gaming cards, video cards and stuff like that. And that's big business for them. They've got a lot of AI. So they've got so many irons in the fire in so many areas. But, the fact of the matter is just look at the stock. The stock broke out of a 2-month base at, let's call it 174.75. Instantly ran up to 190. And now what do you see? Now you see when you zoom in, when you see a daily like you've got showing there, yeah, you can see the clear breakout. Okay, great. That's a classic breakout of a base. And, sometimes issues will break out, run up for a few days, and then they come back and test old resistance. Once broken, it tends to become new support. It's really not happening. Even with that news, you said what, came down to 177?
177. The low last night I had written down was 177.77.
Okay, yeah. So where's support? If you bought it at 177, what's your risk? Well, the risk is the stock, your fluctuation risk actually, is that the stock could come back down to 170, 74 where it broke out. What's the big deal? Even here, percentage-wise, where is it, 181-ish, something like that?
Yeah, 181 is change. Yeah, 181.65.
Okay, so what's your risk if you buy it here and it just falls apart? your technical risk is, it could come right back down to 75. So that's your fluctuation risk upon an entry on a day like today. But when you zoom in and look at the short-term chart, the last 4 or 5 days, you know how Rob Hood's going to love this. You know how I'm one of these people that I like buying issues that are pulling back off their highs to support.
Yeah. Yeah.
Well, go zoom in on a 4 to 5 day chart once, if you can.
Spencer's working on the charts.
Yeah, the 5-day chart. I got you right here.
Okay.
There's a slight delay, but I've got it up.
Yeah, you can see it's pulling right back off its highs. Where's resistance in the last 4 or 5 days? 191-ish. So, I look at this and I'm going, you know what? This, to me, looks like a pretty decent scalp trade. Now, we already own it. We own it at 165. And when it punched up into that 190, I sold half my position. And
why just sell half? Just too much, too fast?
No, you got to always lack some gains. I looked at it this way. Anytime you have a stock that, goes from 165 to 190 in 4 or 5 days, and you're a swing trader, it's a home run. You've got to ring the cash register. At least I do. So now I've got half my position, and I'm going, you know what? This is a monster stock. We all know it. Everybody loves it. The end of the quarter showing up. All the portfolio managers, they want to show that they've got the latest and the greatest and the best stocks out there into the end of the quarter, for their quarterly reports. It's just a common theme. But I like the stock. I've done very well with it. And, I'm going to take a shot at it right at the open. And you know what? If it goes down to 174, 175, okay, I was willing to take the risk. I'm underwater, but how much am I really underwater percentage-wise? Not much if it were to go there. No one's saying it's going to go there. I'm just looking at what's my risk upon an entry.
So you're saying if you were coming here this morning at 181, if it went down to 174 or 175, you'd cut it out and say I was wrong?
No, because that's support.
So so let's set up a trade here because everybody likes risk reward here. So if we're coming here this morning and buying at 181, where would you say, okay, I need to get out? I was wrong. I need to get out. Like where, would you say? I'm just.
I'm looking at it this way. I'm not exactly going to be too tight. See, the hard part with stocks is you have to find the Goldilocks level within yourself and allow for fluctuations. And that's different for everybody. Some people, they want extremely tight stops, and that's great. That's a thing within them. For me, though, I've learned that the tighter the stop, the more I get stopped out, and it isn't but a few days later.
Sure.
I wish I wouldn't have.
For sure.
So, it's really a individual thing with people. So, but I'm looking at it this way. I'm willing to sit with it. Even if it comes down to 174, 175, I'm okay with that. Why? Because that's support. Old resistance, it broke out of a 2-month base there. So, barring an unforeseen, if it goes down there, it's actually a buy down there too, because what's the old technical analysis adage?
Yeah, old resistance becomes new support.
Right. So, we all make this a lot harder than it seems. So for me, if it comes down into that level, there's multiple supports at the 174, 175 zone. So, and I'm okay with that because if you look at the stock on a 6-month, what's the overall trend of the stock? Up. All it means is if you buy it at 181 and it comes down to 175, you bought a stock that's in an overall uptrend that was just a little bit too far away from its overall uptrend support. So that's my thinking anyway.
Let's do the quick technicals on AMD as well. The stock has been moving. It blasted off in orbit around 352 yesterday on this report. It went from 13 to 1374. Then after hours got up to 1460 last night. It's trading right now at 1396. What are you seeing just on the technicals? Look at the daily, even ignoring this after hours action because we're up another 20 cents, but it's kind of looks like it's going to open somewhere within the range of where it closed, maybe a little bit higher. What are your thoughts on AMD?
Well, I'm looking at resistance up in that 115 zone. That's retest.
On the 15.
Yeah. Or excuse me, it's in the 15 zone. And, I can see yesterday, into the close. Yeah. When I look at a daily chart, it broke out of this, let's call it a August and September funk, just going sideways, can't make up its mind. So I can see, that breakout yesterday, and obviously it was news driven, as being new short-term support. So maybe it can run to 15 and a half. It's really a hard call. I think a better trade, is stick with the stocks that are in overall clearly defined higher highs and higher lows along the way.
Jumping over here.
Only the best forget the rest. How's that?
Jumping over to a few other ones here. Downward Dollar's asking about APRN. I think he was making a joke there, but Blue Apron here is a stock that has been going down, down, down. It had a little bit of life there just a few days ago, and now it's coming back to this hard 5 support here. Is this something you look at, or is the trend just not your friend?
It's really not my thing. I want to stick with the leaders. If you look at where all the money's being made, it's in the big, what I like to call the big tape painting names. The Googles, the Amazons, the Facebooks, the Teslas, the Netflix. So for me, I want to stick with the names that are the big market leaders and the big tape painters that have a big impact on the indexes. Meaning, remember how the old adage for us old folks, as GM goes, so goes the market. Remember that? Well, in this day and age, as Google, Amazon, Facebook, Apple, all those big names go, so goes the market. At least when you look at the NASDAQ 100 list. So, I don't really see much. What's the symbol on this? I'm looking at your chart.
APRN.
Symbol?
APRN.
BPRN?
A is an alpha.
Oh, I'm sorry.
Yeah, Blue Apron. One of the worst IPOs here of all time went straight down after the IPO and is now just clinging to this $5 support level. And if it breaches 5, it's scary.
How about we ask this? When I look at a daily, if you were to show the daily chart to a 6th grader and ask him what's the overall trend of this stock, what do you think he's going to tell you?
Ugly.
That's all you need to know. Next. We don't need to make this any harder than it really.
Okay, we'll fly through some symbols with you. Blackberry Soho was asking about BBRY. Had some life yesterday.
Yeah, it did. Yeah, well, the stock was really nice and tight. You can see it hit the low. Notice those lows in August. Those lows were in tandem with the markets. In fact, this whole run that we've seen as of late, it all started at the August lows. So when I look at, BlackBerry, you can see it hit a low and it's bouncing, it bounced up, kept bumping its head up on that 50-day moving average. But yesterday it busted through. So, if one owns the issue, I draw a line support right now, right around the 50-day moving average, 9.25, 931. So, it can come back down to there and be okay. But if you look at the lows of yesterday, personally for me, if you line up the lows off of August, if it goes below it, that's, a break of your trend. How do I know that? Go look at the late June through July. You'll see that it hit a low in June, kind of walked its way back up, put a bear channel in and broke to the downside. Same thing. Just draw a trend line off the August lows. And if it breaks through to the downside, there's your stop loss.
DC wants to know about Starbucks, SBUX. Again, this one's been a little bit of a downtrend recently, but has found some support. Like you were saying, back the August lows, retested a little bit in September, held. It's kind of hanging out near the highs for the last month. Thoughts on SBUX?
Yeah, I don't have a problem with it. Draw a line across, let's just for simplicity's sake, call it 53, draw a line across 55.25, 56-ish. What do you see? You see a stock base building. I see a stock base building. I see a stock that's range bound. If it's going to follow through from yesterday's strength, where's the next stop? Well, there's some short-term resistance at the August highs, just shy of 56. So if it can make it through there. So, but right now, I see an issue that's trying to stabilize. Look at it back in June. Think about it. From June, it looks, gosh, obviously like it fell off the face of the earth. And think about it. If someone dropped you out of a 10-story building, are you going to get up and walk away right away? Probably not. Maybe you crawl a little bit, and that's kind of where I see it here. 53 to 55, it's trying to regain its footing after taking a header from 64 to 53. So I don't really have anything bad to say about it. It's it's range bound. It's Starbucks.
That is a great analogy you just gave, though. I just want to run with that analogy just for a second, because so many people, when they see a stock fall like 10 or 15% in a day, we can use even the EFX as an example. So many people say, oh, it's gonna bounce right back. So rare for them to do that. And that analogy you just gave, if you drop you off a 10-story building, you don't get up and walk away right away. You're gonna have some trouble here. I mean, that would have saved you a lot of money in a stock like EFX, because on the second day there, you had like Evercore, I believe, coming out saying to buy the stock aggressively. That was when the stock was 120. It's now 96. So, some of these analysts maybe need to listen to that advice as well there, Harlan, because I've learned that the hard way. I can remember even some of my first trades back when I started trading in 1997. I would see something going down hard and I'd be like, oh, I'm going to buy that. It's going to bounce back right away. You learn it the hard way, though. They don't bounce back. Usually they never bounce back right away. The odd time if a headline, is incorrect or fake media, something can happen. But I mean, for the most part, when the headlines are real, stock is a bad earnings report, it's rare for it to just bounce right back.
Right. And that's why you want to see stabilization. You want to see the stock confirming that, what, I'm done going down. I just, fell off the face of a cliff. I did a belly flop. My stomach hurts. Now I need to repair myself and catch my breath and decide whether or not I need to call an ambulance or I can get up and walk away on my own.
Yeah. A couple other symbols coming from the chat. Fuzzy APC. The stock is in the news here today. Anadarko Petroleum announced a big buyback. I think it was $2.5 billion. Spencer, if I'm wrong on that, just correct me. But I believe it was a $2.5 billion buyback. Stock is trading up 6% here in the pre-market at 47.60. Thoughts here on APC? Now you're kind of just blasting off, though.
Yeah, you did. Well, when I look at a 6-month chart, you can clearly, with a 50-day, you can clearly see the stock has been in a clearly defined downtrend. There's no doubt. You can also see about, what is that? About 6 days ago, one could say it crossed over to the upside of that downtrend. So here it is bouncing. Pre-market, you're saying 47 and change. Right away, I look at that 48 at the end of July, draw a line straight across. That's some resistance. So if you own it, hey, guess what? You're getting a nice bounce. You're coming up to some resistance. It is overbought, stochastically speaking. And, but remember, overbought can stay overbought. And, I guess I'm looking at it this way. What do I need to see to make me take a trade in this one? Knowing that it's going to gap up and knowing that, remember, this thing just ran from 40 to, simplicity's sake, let's call it 48 in 2-3 weeks? That's 20%.
Big move.
That in itself is a huge trade.
Yeah.
All right. So if you owned it at 40 and it's pushing 48, you're getting some gap strength, you go, hey, that's a great trade in itself.
Yeah.
So, you're going to see some resistance here. For me, I would need to see, to get me interested, I need to see it stage, the pullback off highs that I like to see. And
you don't like to chase either.
Nope. I mean, just take a look at SOXL, which is the semiconductor.
Yep.
What do you notice? All right. Okay, great. It broke out at 102.5, ran to resistance at 115. And if you were chasing it out of FOMO, fear of missing out after you already missed out, where are you at today? This thing, wow, 2 days ago it was at 115 and it hit a low of 105. How are you feeling then if you chased it? That's the stuff you don't want to have to feel. So for me, it's just personal preference. I just don't like to chase these things because you know what? If you missed a bus, who cares? There's another bus coming that could be an even stronger bus. Again, only the best, forget the rest.
Last one before we let you go, I just want to talk gold. Gold is getting crushed here this morning. It's down 1%. The GLD is trading down $1.16. This is off the Fed here still. I mean, it got hit yesterday, a continuation here today. Gold was in a hard uptrend from July, August, and then we got it just in the first week of September, and then we started to peel back. And now we're in pullback mode here in the GLD. Thoughts on going forward here in the next minute here, Harlan, GLD?
I rest my case. You chased the stock. It broke out at 123. It felt good, all the way up to 128. And guess what? Now you got nothing to show for it. It is pulling back. It is pulling back the support here in this 123. I'm looking at GLD. And, the 50-day is at 122. So, I guess, it's getting oversold. I guess you could say it's a nice setup. I'm just not a big fan of gold these days. JNUG looks the same way, by the way.
We haven't had many guests, I don't think, who trade the leverage ETFs, Harlan. I think you might be one of our only ones. So great. All right. Thanks for mentioning them.
Well, I'm a chart pattern guy.
Okay.
I just constantly scan through. I know what I need to see to make me take a trade. And the best trades are always stocks that are in clearly defined uptrends above the 50-day moving average that are pulling back off their highs to multiple support zones in tandem with the markets. Because 3 out of 4 stocks trade within the overall trend of the market anyway. So, don't fight the tape, as they say. You might as well trade with the wind at your back versus trying to roll upstream.
Harlan Pyan is the founder of Amazing Power Patterns. Harlan, thank you so much for stopping by today.
Hey, no problem. Anytime you need something, just feel free to give me a jingle, guys.
All right, have a good one.
Take care. We'll see you soon.
8:56 now. A few more minutes left. Dennis, did we miss anything? I don't feel like we had a few stocks in our list.
Ratings. We didn't talk ratings here yet. There wasn't a ton of them, but Biogen did get downgraded here at Raymond James. That's of significant. Stock is down $1.68 here in the pre-market. Anything else jumping out at you from ratings land?
Let's look at my list right here. As far as upgrades go, no real upgrades stick out to me. Not Buckingham initiating Netflix at a buy, but downgrades. We mentioned the sell initiation that Gordon came out with, but no, Hanesbrands downgrade at Nomura from buy to neutral. Not a lot going on today as far as
ratings land is quiet there unless we're quiet here overnight.
Yeah,
I mean, we're in this market that, and the VIX, if you just want to talk about volatility, I mean, we're back under 10 here. It's 9.67. These S&Ps, don't seem to move at all here right now. You can get, storms coming in. I mean, Maria just rocked Puerto Rico, and, obviously had the storms before that. S&P is just like, Teflon. It just doesn't respond, it seems like, to anything anymore. You get a missile launch over there from North Korea, and they shrug it off too. I mean, I don't know what it's going to take to actually get some fear into the market, but every time we pull back even a few points, it's just buyers below. So, it's the mindset of this market is just higher. Eventually that will break. Eventually there will be something that actually causes some fear and causes some selling. But, as of right now, it's hard to fight the tape, and it's hard to be short, because every time you seem to be short the market, it just continues to go higher. Even though there's reasons, even though, this is fundamentally, makes sense to me to, maybe lighten up because there's so many things to worry about, it just doesn't happen. We just don't get a pullback.
What about the only real news item I saw that I wanted to hit on that we didn't get already was Apple, who came out and said that so their Apple Watch, the new Apple Watch, which you can use without a phone, well, you can't actually use it without it. There are some serious problems with regards to using an Apple Watch untethered from a phone. Apple did get hit a little bit yesterday. I don't know if that was the catalyst, but I saw that because that was probably, in my opinion, the coolest part of their event last week was that you can finally use the Apple Watch without. I don't have an Apple Watch, but I wouldn't get one if you had to have a phone with you the entire time. Now you don't need that, but apparently there are some major technical issues still to work through. So Apple did get a little bit of a hit, I think, on that.
Yeah, and it's been leaking. I mean, if you look at Apple here, the support level is fairly well defined. I know we cut through it yesterday. We went to one down to 153.83, but we did close back up over, call it 155. That's really the line in the sand that you don't want to close below that. You got to close below 155, then you're into the gap area. You're talking about 150. But, as long as it can stay, and not close below 155, the bulls still have a case here, and that support is support until it's broken, and broken. I mean, getting a close below there. But you look at it here, the gap is scary from 150 to 155 because a lot of air below there, and the relative strength is not good in Apple here the last few days. So I still own Apple in my best portfolio. I'm still a believer in Apple long term. I think it's just having a period where it's went for a hell of a run really. When you talk about 2017, I mean, it started the year around 115. Product, didn't blow anybody away there. We're talking the watch, we're talking the same stuff, and that's why it's cooling off. So it's a cooling off period for Apple here. Could it trade down to 150? Yes, it could, especially if it gets close below 155. But long term, still believe in
Apple. Would you buy UBNT?
UBNT. I don't follow this company at all, so you have to enlighten me here, Spencer.
I don't know. It's from the chat. Soho is asking you.
I don't follow UBNT.
Okay.
So I've traded it before, but I don't follow this on a fundamental basis. So no, because I don't know enough about the company.
All right.
Like Kramer would say, I got to do more homework on that one.
Okay, fair point. All right, that is it for us today. 9 o'clock. Time for us to let you go. Get out of here. I have to go celebrate the new year. Dennis has to go make some money. So we're going to let you go. Have a good rest of your day, folks. Do want to remind you again that the Benzinga FinTech Summit is September 28th in San Francisco. Go to bzsummit.com to learn more about that. Also, as I say every day, you can catch the show on our podcast on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket on any of those platforms, or you can just go to youtube.com/BenzingaTV and catch the show as it aired live. Do you want to also make a note? Someone posted this. Someone from Benzinga posted this in our chat earlier today. Benzinga Pro, we are having a flash sale today, and today only on Benzinga Pro. It is normally about $3,000. Today we are selling it for $960 for an annual essential subscription. And so you can basically get a huge discount on Benzinga Pro today. The link is in the chat, the PreMarket Prep chat, for your discount there. I'll post it again here. I'll post it again at the bottom. But Benzinga Pro flash sale today as well. All right, that's it. Have a good day, folks. We'll be back with you, full crew, Joel, Dennis, and myself on Friday. Have a good one.